So this is my channel, YouTube channel. It's a very old channel, and if you just go to the my channel, and here you can see, if you give what will be the best strategy one can initiate during the election result day. So here I have given couple of videos. You can say this is 7 years before, 6 years before. So all these things you can say. So this is 5 months before that December time. I have given various strategies you can initiate. It is not that strategies should be a constant thing. Various strategies you can form: budget time, election time. What it happens, it brings a specific short-term volatility, and the volatility shrinks also. It is not the short-term volatility alone. Volatility shrinks also. So if you just go to our website here, that's smartfinancing.com, and you can go to my YouTube channel here. So here you just make a search here, election related, budget related. So election, if you just put this election related strategies, pre-election rally, how you can take, election result date, how you can take. So you will get all those strategies which you can initiate. So similar way, it is not from now, from the 4 to 5 years, 7 years. Each time such opportunity comes, I used to release this kind of videos. So due to workload, now I am not giving that frequent videos. So you can say that these all, now we have ample time. If you just make a search, go through these videos, you can learn a lot. However, so this time we will understand how the election result is impacting the strategy, how we should benefit, how we should form a strategy. So here we are having zero affinity to any political things. We have only purely in the technical prospects how we should work on this election related time or elections time to get benefit from option strategy. That is our objective. It is nothing to do with which party is winning, who is winning, and your special affection for any party. It is nothing with that. So it is purely on the technical perspective, how we should form a strategy, how we should benefit from the strategy. So two things I am going to explain today. One is high volatility ratio spread. So one kind of special ratio spread will be forming, so which will be only suitable for high volatility situation. So that how we should form and how we should manage this ratio spread, that is very important. Mostly it is based on the ratio spreads. So whatever I have seen that past 4-5 years, all those videos, if you see, you will get this complete outlook on only focus on those kind of high volatility ratio spreads. So these are the specialized trades or specialized positions should be taken only this kind of situation when there is a election result budget day. So you can say that one great amount of price adjustment will happen. So you should take benefit out of that. Fine. So we'll move to certain data points. What happens to understand this kind of situations in a better way? So I have taken 2009 VIX behavior. How the VIX has behaved in 2009. So 2009 we had a central election. Then we have 14, we had 19, like that way. So 2009, if I'm not wrong, so it has started that we had the VIX almost ruling at 40-50 level. Here you can see that. So that was on 23rd or 20th of May. We had that counting and all. You can see that there is a sharp fall in the VIX which happened here. Before that itself, it has signaled there is a big fall. Then it has gone. Maybe this is the time the exit pool and other things has come. So this is what happened in the 2009. Why it was such a huge VIX was ruling here? First, it was a FI dependent market, number one. Number two, there was a coalition government. So there was UPA government was not at a absolute majority. So that is a multi-party government was there. So what happens in 2014? The same VIX was ruling at 30 to 35 range. So 2014, most probably you will be knowing that. So that is so 16th of May, the countings started. We have a 33% fall in the VIX, followed with 15% fall in the VIX, followed with 6%. VIX has fallen in a great way from 37%. The VIX has fallen down to 19% range. These two also somewhat it was FI dependent market. The FIs had greater stake in our market, but relatively the VIX was low because that time all those parameters say that maybe the 2014 was a very turning point that single party majority government may come. For that only VIX was low, confidence was low. So that confidence was high in the market. So there is a stability will come politically. VIX post that part, it has reduced. It has not reduced post that part. So it has reduced the day the exit pools has come. So this is what you have seen. There is a huge fall in the VIX. Why I am saying this fall in VIX? That has a great meaning. So your strategy, if it is not theta managed, you will be punished very badly. So ratio spread, we have to manage the theta very well. So similar way, if we are going for the 2019, similar way it has happened. Exit pool time, there was a 15% fall in the VIX. Then it has again recover back, go back to that. But VIX, you can see subsequent years it is falling down. First it was 60 level, then it has come to 35 level. Now it has coming to 28 level. It has gone, and that too also exactly post the on the day of counting and onwards, it has fallen drastically from 27 range. It has almost come down to 15 range by the end of May. So this is what the VIX behavior happened. How the price has reacted? You can say 2019, 2009. So the price was, there was a base was very low, 17% rise in the index happened. Subsequent, there was a small corrections, and it was so a great move, 15-17% it has happened from that. Once that counting is over, VIX fall with the price also get a good elasticity. 2014, the price has already rallied up before that, and the day of that counting, when there is a big fall happened, price has not reacted. Price has remained stagnant, VIX has fallen. That means it's a great fall in the premiums. Premiums, almost the theta got wiped out. Theta got wiped out. Price remains same with a very little change, and the VIX has fallen drastically. So this is 2014 trend. You can see here 16th May onwards there is a huge fall in the VIX. VIX has fallen, and if you just go for the price 16th May onwards, you can say 16th May onwards, hardly there is a 1% change, 1 to 2% change, and there is not a big change in the price. However, this has corrected to a great, but post the, you can say post our exit pool and other things, there is a 5 to 6% growth in the index also happened. 4 to 6% here, 3%, 5%, 6% growth happened. Once the results are announced, it was stagnant with VIX fall. So VIX fall means what it suggests, again keep it in your record. VIX fall means there is a huge fall in the theta values. So this is what happened. Now coming back to 2019. 2019 also you have seen the same thing. VIX is ruling low. So here 2019 subscript. So 2019 VIX is very low here. You can see here first time 2009 we are into the 50 basket. Then we have come down to 30 baskets. Then we are going into the sub 30, below 30 basket, and that too also a huge fall here. 23rd, 24th, 20, so 23rd, 24th, 27th, 28th, these 4 days, there is a huge fall in the VIX. So VIX and 2019, what happens? You can see 23rd, 24th, 27th. So there is hardly any price movement, hardly some 1 and 2% of price changes month on month basis. You can see. So here some corrections in the past week, followed with there is a maybe this is 3% gain. It is because of the exit pool result. VIX also fallen, then it is stagnated there. So absolute terms only 300 to 200 point movement happened in the month of this thing. So two consecutive things is giving us this thing. What is for the 2024? So currently what we are into the trend, you can say that, see VIX trend I am saying from the beginning 2009 you have a 60% of VIX, then you have gone to 38% of 38% of VIX, then you have come down to 25 to 27% of VIX. This is 2009, this is 14, this is 19. Now in 24, you are ruling below 20 weeks, below 15 also. If I say it is not wrong. So average 15% of weeks you are there. So May onwards, there was a 13% weeks. So it has increased, gone to 20. So you are not gone that beyond that 28, which was last election time 28, 30. That range has not come. So in between, there is a growth, no doubt. Low base, 12%, 13% weeks, gone up. Now it is 20 level. But there is a chance, post these things, there will be a correction in this weeks also. So fine. So here the conclusion comes here that post exit pool VIX fall happens drastically. Price remains static in case of incumbent retains the power. Price move adversely in case of uncertainty that we have not seen now. We have to go to 2004 or later data to see that how the behavior was there. So when that is a 2004, there is a big rally happened. If you are a long-term player, you will be knowing that. So that UPA came into power and there was a correction and there is a huge VIX has come. So now if incumbent government comes in power, you will be having a very low price oscillation along with VIX fall. So that is what the two election trends says, or three election trend says when the incumbent retains the power. So retains the power. So 2009, the UPA retains the power. There is a VIX fall. Price oscillation was very feeble, very small. However, then it followed with the 2014, the preemptive actions was little stable, and that is a also price was stable. Price has almost stabilized, no great change in the price. VIX fallen drastically. 2019 also same thing. 2024 we are already in the low VIX territory. What makes this VIX to fall from every 5-year sequence? We are seeing that it is becoming more stable and stable. If I just go back to the history, you can say 2009, you hardly have 2 crores to 3 crore demat account, 2 crore to 3 crore demat account. So 2009, you have only hardly 3 crore demat account, 3 crore active people were there. So I'm telling 70% of those accounts are having active trading, others are not having. But now we have 15 crores of account, 15 crores. So it is almost 30% of your, or it's 15 crores from 4.5 crores in the last time to 15 crores now. That is one thing. And this particular elections is having a different story to tell. What? This incumbent government is already 10 year in power, means 10 years they have completed. So here we say that when they are more time into power, so mostly the dissatisfaction of the people should come or something, but that is very likely not visible that much. And what are the things happened in this period? So that is, any government comes, they would have done that, but this government, whatever they did, there was three critical things happened. You are seeing only the demat account growth happened, the people, more people in India now participating into the capital market. So that this is not my data, you can just see the demat account in India. So these are the only from that means I have taken from this or number of demat account. So these are because mutual fund holdings can be kept. You can see here 15.14 crore from this thing year on year basis. So there is average 30 lakhs additions monthly in financial year 2024. This is what it is they're telling. So here, why this demat account suddenly started bubbling up and there was, so is it that the people are now aware that market is the only place money can be made? It is not like that. Last 10 years, lot of things happened. A digital revolution has come, which the technology which we do not have, we got it. There is a mass inclusion in the banking system, your Jandan accounts and other things. Huge number of people got added into the banking system, whether they transact or not, but they have opened up the bank account. So you can say that once bank account is opened, then the opening of demat account and electronic trading was easy. So that was one part. Second, quality of life has improved. There is a cooking gas, most likely people those who are not from the village background, they may not be knowing, because I am from the village background. I know what was there in my village 10 years before. We used to ferry the gas cylinders from 40 to 50 kilometers away. Sometimes we used to depute some people to stand in the queue for entire day to get couple of gas cylinders. That is not there. Ujala schemes, many people have got the gas connectivity that has improved the quality of life. So people are not worried that in any season how they will cook the food, so how from where they will get the firewood. So all these things are that. Piped water to mass, electricity transmissions has increased. These have improved the quality of life. So here don't be political in that. So whether this government does, that government does, that is your domain, you can debate, but these are the things happened. These are the things happened, you can't rule it out. So you can say that price gone up for this gas and all. I am not talking about price. I am not debating on that, why the government is charging more, this, that and all. It is available, that goods is available. You can get a gas connection, it is available, gas is available, pipe to water is a availability, electricity, power, the, you can say power cut was a huge issue in India, which has improved to a great way through that grid sharing, power tariff trading. So all these things has improved the electricity transmissions. So quality of life has improved. So once the quality of life improved, so what happens, the demat account, so people started savings. So here this is the, not that you can say that why one person can open a demat account simply because he wants to invest in the mutual fund. No, mutual fund he can invest without having the demat account also. It is not mutual fund try. Mutual fund is causing that huge increase in the demat account. These demat accounts are in by opened by the small people, small investors. That number is too huge, 15 crore every month, adding 30 lakhs. So this time also, another one good factor is that The counting is happening in the first week of the settlement of month, the 4th June. Earlier you can say 2019, 2009, 2014, 2019. All these three occasions, the counting has started in the mid of the month. Mid of the month. So 13, 15, 16, 20, like that. But this time in the first week. First week means you have a average of 1 week there. Second most important part is that the VIX is relatively low. VIX is relatively low as compared to the earlier this thing. And when you say that 15 crore of demat account is opened and VIX is falling, VIX is sequentially falling from 2009 to till date, what does it mean? That means we are no more a economy or a market depend on the FI capitals. Whether you agree it or not, but that FIs, the foreign institutional investors, are not going to create a havoc in our market, because their place is being replaced by this 15 crore demat account holder of Indians. That itself is very low. In 150 crore civilization, we are just 10%. But the growth is rapid. 30 lakhs account per month. You can imagine where we will be after few more years. So these are the factors are there which is low fix. So here why these data points I told, you will understand what happens during this counting period, number one. Number two, how we have migrated from one region to other region. Another one interesting factor I want to show you all. So many of you will be examining the data points of that data points of stock market. So many of you will be watching that also. So one very interesting factor happens now, just few months back, it has started. You can say this is the FI's fundo data of FI's index future index option. So you can see here 2000 we have a long data, you can say 2016 onwards we have the data, or you can just go beyond that also, you can get that data. So you can see all 2014, 15, 16, 17, all these years net values, if I say month on month values of this thing option data specially, so it is 10,000 crore, 17,000 crore, 20,000 crore. So you can see till 2020, till 2020, here there is a 94,000 crore in April 2020. Then very less chances you will see, very less places you will get. Only to January it is 1,17,000 crore. Very few occasions you have gone 1 lakh crore above. Hardly from 2017 to 16th November to till date, not till date, till the 2023 September, this page August 2023, hardly 3 occasions you will see the option turnovers or the option positions of the FIs will be more than 1 lakh crore. 2 to 3 occasions. What happened after September 2023? September 2023 onwards, these are not retails, these are the FIs. 2 lakhs, 2.5 lakhs, 3 lakhs, 4 lakhs, 6 lakhs. So no point of time you are getting less than a lakh. So here also 2 lakhs buying. Mostly it was selling heavily. Now it has gone to 2 lakhs. This month alone you have, if you just go to the fund figure, now also you have 65,000 crores of sales in the options. So what happened September 2023 onwards? There is a behavioral shift of the FIs. FIs having a very low cash holdings in the Indian market. That doesn't mean that they do not have the holdings in the other markets in our market. You can see here historically most of the positions are now being held either in the stock future purchases along with the option. So most of the things you can say that heavy built-ups they have into the Indian market, especially in the futures and option segment through participatory note or through some channel. Their holdings are very big there, very big there. That is a big behavioral shift. Same way, the cash market data you can see earlier years where the retails have no power, hardly you can say 2008-9 onwards, you can say this is the domestic institutionals, our DIE's money was 2000 crore, 3000 crore. To touching a 10,000 crore itself was a big dream. Very rarest cases you can get 2008-9. But what happens in the 2022 onwards, this has increased to 30,000 crore, 20,000 crore, 40,000 crore. That 10 is a dream now. So that is a multifold accounts opening, multifold the involvement of the people. So that has made the market more stable. That is why the VIX is low. VIX is low. VIX is no more depend upon, because our dependency on the FIs has reduced. VIX is low. So you have understood post the declaration of the exit pool data, there will be a huge fall in the VIX. Number one, which will cause a huge theta decay. First part. Number two, there will be a price oscillations, but that price oscillations may be feeble. If the incumbent government comes into power, very less price oscillations can happen in the upward direction. However, in the downward direction, if the incumbent government loses the power, downward movement will be more. However, the base effect has changed because the quality of life changed. The people's participation has increased multifold, 300 to 400%. So that is the main thing. So here participation increased, skill has not increased. That is, I am talking about this fact. Participation has increased, but the skill has not increased. So we have to consider all these things and form a strategy. So now coming to the strategy which I have told you, there are two things I am tackling here. The high volatility ratio spread. So many of you will be knowing that there will be a ratio spread of 2/1 ratio spread, 5/2 ratio spread, means 5 lot you are buying, 2 lot you are selling, 2 lot you are buying, 1 lot you are selling. So whatever may be the depth, width, all things, that is known as your spreads, ratio spread especially. However, when we talk about high volatility ratio spread, the buying lots will be more than 5 with respect to selling of one lot. So when you sell one lot but number of buying is going by 5 lots, that is known as your high volatility ratio spread or delta stuffing. So this is also another name is high volatility ratio spread is delta stuffing. You stuff the delta, which is, what is a stuffing? So you can say that is stuffed parota you are eating, stuffed parota, stuffed aloo parota. So it is just like a parota, but the potato is not visible. It is a sandwich between two parotas, two rotis. So two rotis, one roti, you put some potato on top of that, put another roti. It is stuffed, invisible. But potato is there. You can't say potato is not there. Potato's presence is there, but it is not visible. So similar way, when you take the exposure in terms of delta by managing the theta, however, the delta is not visible, that time you say it is known as the high volatility ratio spread, or this is also known as delta stuffed strategy. How to form? So this is, you understood all in one, when the number of buying lots are more. So these having this strategies, when you initiate, either the delta should be 0 or it should be 1. Too extreme, too extreme. It should not be 30%, 20% and all. Either it should be 0 or 100%. So this strategy is having the nature either 0 or 100%. So here I have given you one example. Selling 18,000 call deep in the money call option at 4,600, buying 22,500 call option 8 lots at 620. My price may be different. June series it is. I've just taken approximate price. Selling 25,000 put and buying 22,500 put 6 lots. So here with every, so here deep in the money you have chosen, this is 1 1. This is your almost 1 will be its delta. This is also almost 1 will be its delta. So these delta will not be 1. So 8 lots you have taken. So 8 lots, say it is 4.56.5. So 4 delta it will be there. So these two also having 6 lots. 6 lots means this will be also having 4 or 3. So 4 or almost 4. So this minus 4 plus 4 will be cancelling each other. This is almost deep in the money. This also cancelling 0. However, delta is stopped here. So what happens while forming this strategy, while initiating the spread? So not after you initiate the spread. So once you are initiated the spread, that time, or initiated the ratio spread, that time the delta should be 0 or 1. No in between delta allowed. Then what happens? Once the price move from here, now you are at 22,500, goes to 600, 700, 800. So delta started adding up. So delta will become positive. One same way if it is falling 22,000, 21,000. So delta also will go to negative. So this delta will expand or contract after the thing. So here what is our expectation? So now we are at 22,500. Post result there will be a huge move either in the upward direction or in the downward direction. But this is delta stopped. This is not theta managed. Suppose price never moved anywhere. So 8 lot you have bought here, 6 lot you have bought here. So both the things will have a rapid decay in the theta, which will kill all your profits. This is for example only, don't initiate it. So this is, I'll tell you which strategy to initiate next. It is only for explaining what is a high volatility ratio spread. So this kind of strategy should be taken. This also you can take some time. If before that result there will be a huge rally, huge correction, then you can take. Like December time, it was how to manage this volatility ratio spread. Exit pull, VIX will fall, which will result a rapid theta decay in the options. So this is the major adjustment risk. So rapid theta decay you have to manage before. If the incumbent government loses power, scores less majority, then the VIX will rise with huge downward price revisions. That also is a possibility. Both the risk it carries. So we do not want to take that risk. We have seen the data points post exit pool or something, we have a huge fall in the VIX. So I am moving in a safer side. I want to take the benefit of all, but same time I do not want to expose myself. So what I will be doing? Pre-adjusted strategy. Have a look here. I have taken same selling of 1 lot. However, I also bought 7 lots here. But July months 22,400 or 500, huge difference, 2,000 point difference here. So this also I am selling 5 to 6 lot, making the theta almost favorable to me, 5 rupees or 6 rupees. So just see, if you have our software, you can able to estimate its theta and other things. So if you do not have a software, then it is difficult to for you to make that theta calculations and other things. So here what I have shown you, the similar things I am going to show you here. So here, once you have the privilege to get all this particular, here I will be, because profit estimations will change, because the profit and loss estimations will change here. The reason is Currently what VIX you have, that VIX is not going to retain post exit pull, it is going to fall, and post result declaration on the day of result also it can fall. So here I am telling 18,000 call option to sell one lot. I am telling you sell a by call options of 22,500. Why 22,500? Why not other things? 22,500 currently we are trading buying of some 8 lots or 7 lots, 7 lots, 7 lots. If you do this alone and say 20, 15 days we are holding, so calculate, see the net Greek analysis. This is we are at a 3.01 Greek theta negative. So theta negative 63 rupees. That means if there is a consolidation, then this 63 is a deterrent for us. Every 1 unit will be losing 63 units of price, or every lot is having a 63 rupees of per day time decay. So that part is there. So you want to manage that. So how we can manage that? So I am just going to manage that theta. So for that what happened, I am going for July. So July, whatever the last strikes are available, last strike or any strike which is having the IV equal to the buying strike, IV equal to the drawing strike, or any strike having the similar last strike is available 24,400. This I am selling. Whatever extra number of lots I have taken, that 6 lot I am selling here. And so I will be having a calculations of all these things. So it has to do its calculations. And once I go for the net Greek, so my delta fallen and theta become positive. What was before? Negative, means I was losing per day. Now I am gaining from the theta 18 rupees per day. So that theta positive, why I made? Because post declaration of the result, post declaration of exit pool, VIX is bound to fall. That has history has suggested me. VIX is bound to fall post that. Even though incumbent government losses power, VIX may go up to certain extent. However, price revision will be very drastic. So in that case also, positive theta will set. So this is one part you can see here. Delta also I have brought it to very less, 78%. So 100. So here 78%, 100% to which was 300% above, I have brought to 78, 100% theta positive. So mostly this is being managed. Number one. Number two. So theta decay is very prominent. So this one, you can, if you illustrate similar kind of setup, you can take. Now lot size is 25. See, another setup is what we wish to do. We want to add to wide wing butterfly strategy. Wide wing butterfly strategy with delta almost you can say zero. Theta somewhat negative will be there. What is that kind of strategy? Wide wing. So here what happens? I am going with say 20, very deep in the money, 1,000 point deep in the money. I am forming a 2/1 ratio spread. Along with that, I am also creating here 500 point depth and here 1,500 point depth. So here I am selling one lot here 22,500 deep in the money options, preferably 1,000 point intrinsic value options. You should purchase 2/1 ratio spread wherever the Nifty is their current value, so that you can sell. So this is a wide wing butterfly call and put, but this has a peculiar nature. This particular strategy having a very peculiar nature. This particular strategy, what happens if there is a consolidation, price consolidation happens. Say currently you are at 22,500. Consolidation happened 22,900 to 22,300. This particular, so here one small revision history, because lot size 50 I have taken. so it has to be revised. So this, you can say, you will be still at a profit. So lot size is 25, so that is not outdated in my software, so that's why you are seeing that 28k, 40k, but now lot size is 25, so you can say that half of this thing will come. So these profits are possible only when there is a consolidation. So once this consolidation breaks in the upward direction, goes in the top, my profits will reduce. When the consolidation breaks and comes in the downward direction, my profit will increase. So this is also one of the setup you can take. Why doing butterfly strategy in call and put? What you have to sell, which is your why doing. Currently wherever the nifty is there, 22,500 call and 22,500 put should be sold. Along with that, deep in the money call and put options, you can have a ratio spread. Simple 2 by 1 ratio spread. You can have 5 by 2 also, 5 by 2 ratio spread. 5 by 2 ratio spread also you can have, instead of 2 by 1, 5 by 2 also you can have. But this is very important. This put and call need to be sold. Why it should be sold? The rapid fall in the weeks with almost very less price action, this strategy will give you good benefit, provided this should be taken with the somewhat negative theta you will be having because of why doing butterfly, because of deep in the money options. Theta will be there slightly negative, but delta you have to bring it to almost zero. So delta is zero. Theta you cannot make it positive here, because if you make it theta positive, delta will not stand with you. So for that, for easy sake, make delta zero, allow the theta to be negative or positive, whatever may be. So first case, theta positive, this is one case. And profitability also, profitability only in the upward directions. Downward directions, it is having a downward directions, you have the losses. Upward directions only you will make the profit. So this is one part. Put you can add here. So here the way I have added the calls, you can add the same way with the puts also. Puts also you can add, so that it will nullify. It can both the sides, any side market moves, you will get a profit. You will get a profit. So this is one trial where theta is positive. So theta is positive, you are gaining from theta. Second option, theta is negative. However, you can gain from any kind of post VIX fall consolidation. Consolidation. So you have any query, you can ask. So two, box spread. Many will be knowing that, many may not be knowing it. Box spread means selling a in the money options call, sell a ITM call, deep in the money, deep in the money call, also buy a ITM call, buy a ITM call. Similar way, sell a ITM put, and deep ITM put sell, deep ITM and ITM put buy. Both will be in the money. ITM put buy. But say selling and buying in between, if there is a 1,000 point difference is there, you should get 80%, 70 to 80% credit. 20% will be a, since theta decay factor is there, so Bangiji, you increase this thing to 90%. Pullback spread in 90%. So 90%, if you are taking that 10% also, if you want, you can manage with some short strangle or anything in the OTM options. So that also you can do. So that how you will do, so that also you can do. So that part. So here, what is our catch area, you try to understand. So here, strategy is not important. Which is important to know, there is a 100% probability, or there is a high likely chance, if the incumbent government comes into power, then also the VIX will fall. If the incumbent government loses the power, also VIX also going to fall. VIX fall is definite. That is going to happen. So this VIX fall is huge, huge, huge. is going to happen. Earlier case, VIX was in a very higher territory. So fall was significant and that option premium decay also significant. Currently we are at a 20%, but there is a chance we can fall. So this 20% also gone up in a great way in this recent past. So what we have been with, so to 2024, which was 12-13, now we have gone to 20 range. So this 20 range, if it is surrenders and comes to the 12-13 without any great move in the price, so what will happen? So price, what has happened month on month basis? So month on month basis, we have no price move happened. So 2nd May, we have started the market with 22,648. Currently 18th May, we have closed at 22,502. So month on month basis, there is no escalations, no growth. But in between, there is a 600 point correction happened. From there, it has moving up. So there is, you can say that whatever lost, it has lost the same amount, it has almost gained, but no value additions. So that means market is eagerly waiting for specific breakout. Only positive part here is we have this particular election counting on the first week of the June. So we have a leverage for entire month. Earlier elections, midweek of the month it was happening. Now we are having in the first week. December also we had the similar thing first week, and it's a great rally happened. 1,100 point or 200 point rally happened in December, that all of you have seen, because first week also gives a great price oscillation. So that is also is a part. So that one part is there, but VIX decay is of sure. VIX is going to fall. So our aim is to manage that. How we will manage it? So we do not want to, so will be, say here, if I am taking a strategy, I should manage the theta the most. Delta, I should not be worried about. Delta is again coming back to me. So here, if I am forming a high volatility ratio spread, so 7 lots I have added here, and though it is a 4,500 point depth, but nothing to worry about that 4,500. This should be managed with this 6 to bring it to a positive theta, slightly lower. 24,000 also you can go for. I have gone for 24,400. Go for 24,000 also, nothing wrong in that. So this particular strategy, so what we have found here, so 24,400, you can go with 24,000 also. 24,000 also you can sell. So here, if you calculate, but this profit and loss is not correct. Why it is not correct? Because it maintains the same VIX, the VIX will be different. So profit and loss, most likely the losses will not come to a great extent. So if there is a uptrend happens, and you can see a great value you can get here. So theta should be managed. Theta is positive here. So other case theta is negative. However, we have gone to deep in the money ratios. Deep in the money ratios. So here one exception you can add here. What is this? Instead of 1/2, you can add a 5/2 ratio. 5/2 ratio. So you have 3 lots here. So you can manage the 3 lots here. By selling 3 lots, you can manage. So that also you can do. So this also you can initiate, and this is the best strategy to initiate in this kind of situation. You can initiate Hanumantaji, immediately you can initiate, or you can just 1 or 2 days before the exit pool you can initiate. Before the 1st June you are having the last phase of election, so before that 1 or 2 days before you can initiate. So that is, you can decide when to initiate that. Lot size is 25, so margins has reduced to a great half. Lot size has become half, so here you have a privilege. No, these are pre-adjusted. Manish Agarwal ji, I have mentioned it, pre-adjusted. Why I am going for a pre-adjusted here? Because that situation when it comes, it will not give me the time to adjust. So these are the pre-adjusted strategy. So the when that volatile VIX will fall, I will not have the time to hedge it also, because that damage will be theta decay will be permanent, which will never recover, which will never recover. So for that reason, this is a strategy you can take. Very sort of majority by BJP and group, or there is a instability comes in the country through political mean, then you can say there will be a deep correction also is going to happen. So only sitting in the call side also is not advisable. You should sit in the put side also. Anybody has any other into account which will not work practically, because this particular profit and loss what you are seeing, Manish Agrawal ji, it is going to change in a great way, because the VIX is going to change first, number one. Number two, this has taken the current vega into impact, but that vega is not going to stay because the external situation is different. Exactly on 2nd June there will be a huge fall in the VIX, views fall in the week. So this profit and loss will change. So you can say 25 to 30% this profit and loss will change. Profit can increase by 20 to 30%. So liability also can increase by 20 to 30%. But the second alternative is a silent alternative. Both the ways it is there. So it will have already adjustment. Pre-adjustment means there is a situation is going to come, but that situation will be so powerful that it won't give us the time to adjust. So before itself you adjust, before itself you adjust, it is pre-adjusted. Pre-adjusted, why you are forming instead of a ratio spread, why you are selling one lot here? This is the pre-adjusted component. So this is pre-adjusted component. So why you are selling 6 lot here? So this is also a pre-adjusted component. So theta you are adjusting, so it's a pre-adjusted component. When to exit, when profit you exit, when loss you exit, going to give us the gain. Try to understand that part. It is not that okay, it is election time, you told this, I have initiated it, get some few thousands and happy with that. That happiness will be a very feeble happiness. All election time I will not tell you that. So here question is, try to understand who is the contributor here. Why we have gone with a ratio spread in the deep in the money options? Why we are having a this delta stopping approach in the first strategy? So here what happens, both the strategies are pre-adjusted, means theta one place theta is positive, other place delta is stopped zero, theta is negative. Yes, Manisha ji, you are correct. So Manisha ji is asking why these 7 lots I have taken almost the same value. So here how much I am getting, same amount of money I am putting it here. This additional 5-6 lot what I am selling it here, that is just to gain the time or theta values. So this is whatever the amount you are receiving here, same amount of money you are putting here, and this additional whatever 6-7 lots you are selling here to manage the theta. Strategy 1. So when to book profit in this, if it is going 22,800, 22,900, 23, book the profit. Similarly put also will be there. So if the put comes down to 22 level, book the profit and come out. Similar is here. So you can see this also is here. So there is not a, so this part if you see, there is not a great growth here. So if the strategy gives you 20 to 300 itself is giving 40k profit, 20 to 200 it is 42. Then after you can see hardly 100,000, 100, 200,000, 2,000 is increasing with a 200 point of fall. So there is no point in holding this thing. Instead of 23, 23 plus or 23 plus, 22 plus, you can book the profit and come out. Payoff is being designed with a Black and Scholes model. Black and Scholes model is a theoretical model. So whatever the softwares you are seeing, graph, chart, payoff, everything, it is what? Black and Scholes model. Black and Scholes model, if you open any book and read, it is written Black and Scholes model is a theoretical option pricing model. So you are initiating a strategy, Baba, it is a practical. So practical, you are initiating one theoretical model, then what is practical model? So they have already clear, this is a theoretical model. So theoretical model is having 33 basic strategies, which comes saddle, strangle, god, condor, all these things. 33. So you have to make it little hybrid. Hybrid strategy means it will not have a name, but same components will be there. Same butterfly will be there in a different way. Same strangle will be there in a different way. Same straddle will be there in a different way. So like this way you have to form. Infuse 2 or 3 basic strategies, make it as a hybrid strategies. So when you make the hybrid strategies, you should understand the market first. What is market? Then comes here post elections, what happens to the VIX? Once exit poll comes, what happens to the VIX? So these are the things you have to see. What kind of situation is prevailing in the market now? So markets of 2019 and market of 2024 is different. 2019 market, you have 2019 market, you have hardly some 6 crore people involved. Now 15 crore people involved. So now number of participants has increased. 2009 bank account itself was not there. 60 crore people didn't have a bank account at all. No bank account. Imagine a situation. So first we got the bank account penetration on 2014. So that is bank account is not there means how you think that market will grow, people will invest in mutual fund, this that, because cash to carry these businesses cannot be done. So bank account penetration happened. So there was internet penetration happened. Subsequently many things happened. Internet penetration, bank account, easy of in only through Aadhaar card, by not signing any agreement you can open up a demat account now, start investing, go to any broker's portal, just give your Aadhaar, so open up a demat account, start investing in 5 minutes. Earlier you sign one huge booklet of 500 pages, it will get activated after 15 days, you have been paying 700 800 rupees for that. If you would have forgotten, you please recall the memory, that was the fact. Now zero money required for opening a demat and trading account. You can link any bank account, you can have a QR code related price, you can send GPay also, you can made it. So lot of thing has changed. So this easy of availing the facility has created, so it has created an opportunity, it has created a risk, it has created a competition. Three things has happened. Opportunity is what? Many people came into power, many people are invested, we are no more dependent on the FI capital. So that is one part. Opportunities. Difficulties, most of the household incomes now shifted to mutual fund or direct market instrument. So bank has lesser money in the FDs and all, that is reducing, because that part, and that should reduce, that I completely support that. So that is another part. So opportunities are there, risk is there, then also it has competitions. Now you are forming a strategy, somebody else will form a strategy. It is not that whatever the things is being said, no, Indian market is not fit for F&O trades and all. Couple of days back it has come from this thing. It is not that. Many youngsters are studying these things, they are studying these things. So it is not that strategy. Yes, they have started with the similar straddle, strangle, god corner. Slowly they will educate themselves and go for higher type of things. Strategy 2, what basis I have selected. There is no specific basis here, Manisaji. Strategy 2, what I have taken, just a wide wing butterfly, and these two are deep in the money. 1,000 points oscillations I have taken here. I am at a 22,500. So I have just taken 1,500 point down. 1,500 deep in the money. Both I have gone with the deep in the money. Here my objective is set here. I will be selling this 22,500 put, 22,500 call. So these two will be my contributor. So price oscillations, I am not expecting there is a 2,000 point movement should happen. So that is not my expectations now, as of now, till the stability of the government is there. If a stable government comes, I do not expect 1,500 point of oscillation. So my spreads will have a lesser damage. However, my sales will have a good profit. So this is a wide wing butterfly strategy, in call and put. But the difference is the ratio spread is happening in the deep in the money. So what is the philosophy behind it? Delta is almost zero. As I said to you, I have to delta is almost zero. I cannot make it zero. I have just made it zero at any in the money ratio spread and this, but these two will not change. See here, while forming this strategy, wherever market is now 22,500 market, tomorrow it may go to 22,800. Day after tomorrow, on the day you are initiating, it may be 23. So this, wherever the market, the ATM options will not change. These two are confirmed sell because we are going to benefit from theta. Then remaining spread you should arrange in such a way that whatever I have taken 1,500, you can take 1,000, but delta should be zero. Theta will look like negative, but it will not be negative. So it will have a wide wing butterfly. So once you make it a 5 by 2, so you can say 5 by 2, 3. So it may not be wide wing butterfly. So it can have a different nature. So if you make it as a 5 by 2 spread, so 3 lots you are selling here. So profitability also will increase. So this having a theme of delta 0. So two ways, as I said to you, what strategy we are going to form. High volatility ratio spreads suitable for high volatility. 0 or 1. We cannot take in between delta. That you ignore because when you initiate the strategy, that is by entry. So here you initiate. That says that currently if you are initiating, the uptrend will be triggering from here, downtrend is triggering from here.